What's going on, guys? So today I'm going to talk to you about how I structure my different businesses and my kind of whole setup with that. So one, pay less taxes. Two, I have more protection for my businesses and my personal assets, and just kind of the easiest way and the smartest way to do this. Now, I am by no means an expert at this. This is not advice. This is what I'm doing. So consult a professional. And I'm not new to this, but I'm definitely not super advanced with this either. So I am currently have this set up, but there's different changes to do it and different ways of going about it. So my information might not be 100% accurate, but it's the best of my understanding that I'm going to give you guys this information. So what I'm talking about is if you have multiple businesses or even one, the whole thing I'm going to be talking about is starting a holding company. Now, what is a holding company? A holding company is just a corporation or LLC or whatever you want it to be that owns all your other businesses or the majority of them. And the only operation of that said holding company is to hold the money, the assets, and invest them. Now, when you're setting up your normal businesses, let's just say you're doing LLCs, there's a couple things I want to mention, and you can Google this and find it pretty easily, but there's different ways of setting up LLCs, different types. So if you have a single member LLC, which means there's one person in it, it's a pass-through entity, which means you're going to be taxed as personal income, even if you leave that money in the business. If you have partners, it depends if you choose C Corp or S Corp, that's just the way you're taxed. But the way I set my LLCs up is I have a trust, which I own 100% of, and that is a member as well on my LLC, as well as myself. So then it becomes not a pass-through entity of an LLC, which gives me a little bit more protection personally, and the tax benefits of doing a C Corp if I want to, or S Corp, or one of those. Now, with a holding company, like I said before, it owns all the LLCs. So I want to give you guys an example. Why is a holding company good for protection and for taxes? So this little chart I have up here, let's say this is me here. Now these are all make-up numbers. Let's say I have $1 million in my bank account. I have $500,000 in cars, and my house is worth this much. Let's just say that's how much cash I have, and these are my assets. If I give those all to my holding company and someone personally sues me, not to do with any of these businesses, and my holding company owns all of those, then I have a lot more protection here myself. Now, same goes kind of with the LLCs. So since your holding company, the only thing it's actually doing is holding the money and investing it, it has a way lower chance of being sued and losing those assets. So that's why, let's just say we have three LLCs. So we have LLC 1, LLC 2, and LLC 3. They're all different businesses. And let's say this one makes $400,000 a year and has a $100,000 car as an asset. This one makes $400,000 as well, and this one makes $400,000. Now, normally, these would all be pass-through entities. Since I'm the only person that owns these, it's a single member LLC, which is a pass-through entity, which means this $400,000 here, so $1.2 million this year, would be paid to me and would be personal income tax, which for me, it would be a little bit lower at this rate, but for me, this year it was 49%, which was about $2.8 million. So I would pay $588,000 in taxes if I just had my LLC set up like this. LLC obviously is limited liability company, and it's made to separate me and my personal assets from the business. So with this, obviously it will depend how you set it up, how much protection you have with it, if you have insurance and other factors. But let's say I have this much money just sitting in the bank account of my LLC. If I get sued, the person can sue and get this much money, and then I'd have to go bankrupt with that LLC and close it. However, if I have $2,000 in this LLC and the rest was already paid to this, and someone sues this LLC, they can only get that $2,000, and I close the LLC, I bankrupt it, and just restart another one. And they can't go through to the holding company, and they can't go through to me. Again, they might be able to if you don't have the right protection and your bank accounts and how you're transferring money stuff isn't set up right. But if you do it the right way, they cannot go through this LLC to collect more money into your holding company, because this holding company manages this LLC technically, since it owns portions of it or most of it. But they can't come through and get money because they are not responsible for any of the actions or operations of the LLC. So pretty much it's laid out. All the operations done are done by the LLC, but all the money goes to the holding company, aka you're way less liable and it's harder to sue through that. Now, that's also the reason this holding company is holding all the assets as well. Now, on top of that, again, it's going to depend on your taxes, how you set it up, but the corporate tax rate, I believe it was around 32 or 36% previously. It just lowered to 21% for 2018, which is a huge jump. Now, what does that mean? If we have the money, we keep it in the holding company and we set up our tax structure, right? This is going to be the part where you guys have to go do research. I can't really give you advice or tell you on this. If you keep the money in your holding company, now there are different ways of paying the holding company. You don't just say, here's your cash. You can do it as dividends, which you can write off some on taxes, which it gets confusing. I don't want to go into. But let's just pretend for simple, keep it really simple. Did I say simple enough? It's simple. Let's just say all the money and assets from all our LLCs go to our holding company. So our holding company now holds this car as an asset, just because if we get sued and have to close this LLC, we don't want to have to give them the car as well. Let's say, so we made 400,000, 400,000, 400,000, so 1.2 million. And the corporate tax rate, which is for this, is over here with our holding company. So off the 1.2 million, we're only paying 21% in taxes, which is 250,000. Now, a holding company can invest in stocks and real estate, in assets, a couple different things. There are some restrictions and whatnot. But let's say I was planning this year to invest. Let's just say I was planning to give myself 200,000 and invest $1 million. Now, if I did that over here and paid myself, okay, let's just take off the 200,000. I gave that to myself. So we paid 588,000 in taxes. So let's just say we only have 600,000 left to invest. But if we did the same thing here, and let's just say we paid ourselves 200,000. So this is based off 1 million. And we pay 20% in taxes, we pay 210,000 in taxes, and we have $790,000 left to invest. So that's a 30% difference. So imagine, I'll use bigger numbers just to show you guys the example. Let's say we can get a 10% return on our investments. We're going to invest in stocks, let's say. And we think we can get a 10% return per year. We're going to invest 800,000 over here if we do it this way. But if we do it this way, we're going to invest 600,000. So you can see the difference. The difference is $200,000, which comes out to about a $20,000 a year difference from that single investment. And obviously you can see the big chunk. We paid 252,000 in taxes over here, and then 588 over here. Now, when you do pay yourself, if you have the holding company or the LLC and you pay yourself personally, you will have to pay this tax. But if it's money that's going to be sitting in your bank and you plan on investing it and it's in the holding company, it's more safe and you're going to pay lower taxes on it. So this is kind of the current setup I have with my LLCs and the holding company. And again, I'm still learning this. I wanted to share with you guys what I know. By no means an expert on this. And there's a couple factors in here that I probably didn't mention that you need to research and talk to a professional on. But this is the general idea I get from this and kind of how it works. Again, how you pay them and things like this will vary, and there's dividends, a couple other little things in there. But in general, this is technically how it works and the benefits of it. Now, let's say you paid the holding company and you're like, well, I need money for my LLCs or for myself, but I don't want to pay myself, get this personal income tax. This holding company can loan you money at the current interest rate, and that's one of the operations of the business. So you can lend yourself money if you need to, or your businesses. So it's a pretty cool structure. I'd tell you guys to go look more into it. Maybe talk to a professional if you have 1 or 2 LLCs, or even if you're making a little bit of money, it might be beneficial to start doing this, or talk to someone who does this for a profession. So I hope that was kind of informative for you guys. I get a lot of questions about how I set up my LLCs and whatnot. So the basic structure is I have a trust and myself both own the LLC. I own 100% of the trust. No one else can touch it. And that makes it not a single member LLC. So it's not a straight pass-through entity, meaning I can have other kind of C Corp, S Corp, and just for less liability of saying, well, this person it's a single member LLC. It's an LLC, but the bank accounts are commingled. They're acting as one. So technically they might be able to sue through that. So it's all about protecting yourself, just adding layers, which this holding company does as well. And you can have your personal assets like a house, a car, and whatnot owned by this holding company. So Hope you guys enjoyed that, and I will see you guys tomorrow in the next video.